TGIF, everybody. Hope everyone had a good week. Everyone doing all right? Hello, Face. So, my thoughts are this on a Friday. Good morning, Hammett. Is no one ever worried about going home long risk over the weekend? Hi, Brock. So I'm curious to see if people are going to be willing to go home long risk over the weekend with everything that's going on. So taking a shot in the S&Ps here on the short side. I'm not saying we can't, try and take out this high, and I could be wrong if, we start trading back over 93, but I'm giving the stop some tolerance over 3,000. And the main reason I'm doing it is I want to see if we could get a 2-week reversal. So I know it's busy, this chart, but 2-week reversal, all you do is count back 2 candles. That's where the market's memory is. That's where we closed 2 Fridays ago, 29.88.5. I call that an off number. And I think that's right about where we're at right now. So I'm speculating, which is what we do, that people may not be as willing or aggressive to go home long risk over the weekend. So we'll see. Obviously, we need closes back under Steve's zone, which was 60 to 55 to get this thing going to the downside. But I think it's worth a shot, and that's my rationale for it. It's been a long time since we've tried to make a new high. These were not new highs. They were maybe a double top. So we'll see. I really think we're at this juncture where we're either just going to blow off and head towards 3,100, which is what I think the majority is saying. And I'm not saying the majority can't be right, but just taking a little speculative shot that by the end of the day, because of some risk aversion, that perhaps we fade. This is supporting risk, what's happening in the yen right here. So far, we've bounced back from the high we had early in the week up here at 850 to the 78.6 level right here. So again, we'll see. This is above the 2-week off number. In fact, I'm underwater on short. I tried yesterday. The off number in the yen is 108.09. So let's see. We're right there. So the risk instruments are right at 2-week reversal points. We'll see if they get rejected or close above them. And they close above them, I recommend you not fight it over the weekend. And I wouldn't go home without a lead. And if things go my way during the day, I'm never against taking partial profits. Say like, here, if the market sells off towards 280, taking a piece off and then moving the stop down to BE. I think that's about it. I'm a little surprised at the strength in the Swiss on this candle, with the euro still being kind of firm. And I think that's about, gold. The metals had a very bad week, and we're revisiting this throwover line down here. This time, I don't think we're going to hold it. I think we're going to break through it. And the Dixie almost got to new highs. Still a decent week in the Dixie. We'll see if the Dixie fades or not. But the third drive's going to come up right around par, 99.80, if you just look at this high and this high, and if we get another shot up in the daily. So, guys, you only have a couple of days left to do this. And you know how I feel about Friday being a good time to acclimate yourself to the platform, and what a great job the guys have done in developing this platform. I know you guys have seen me show it to you a million times, but here's 1,000,001. So you get all the instruments that we play. This was a nice feature that Steve and the developers added, this data flash. And I think what's unique about us, besides we care about you, is all the different types of analysis that you get. Grega and Andre and Blake, Steve and Stell, and then you get all the takeaways down here on all of this. And what a time saver just for where the support and resistance is and bull and bear lines on this. Plus, you get all the active pattern in plays. And I think one of the best features is, hanging out with the community in the chat room where Amanda's providing her live trades. And, you hear Blake talking about some of the guys that have been in there and gals that have been in there that have moved over from when he was with Wise Trade. So this is not a hobby to a lot of people. So if you're trying to bring up your game, the best way to do it, and Blake's there all the time, could always just ask Blake. He's going to be sharing what he's doing. So if you want to know what Blake and some of the other members are doing in the markets during the day after face, that's your way for doing it, is to have access to our chat room. And I think it's a great investment in your future to have a chance to have a better fall trading season, because you have all of this at your fingertips, every once in a while. And I'm not totally dependent on it, but I look at it a lot because, say, for example, like the yen right now, I'm underwater. I wonder, I could go, well, I wonder what Greg and Andre see here, right? So I could always just pull out. This is macro. Let's see where Greg is at on the yen. So it looks like he still has it heading higher. And I'll tell you what doesn't show up in your account is there are many times I put on a trade and then I go look instead of looking before I put on a trade. That it looks like he's looking for maybe what we have here or new highs up here, 890. Okay. So I wish I'd looked at this earlier, last night before I did this. Anyway, so you have all of this at your fingertips, and maybe it'll save you from making some bad trades. John says the best one is Amanda, but they are all great. So, it doesn't show up in your bottom line if you avoid a bad trade. But I'm telling you, it's just as important as a winning trade, even though it doesn't show up in your balance. And this could be, how I talk about intelligence gathering when I bring in guests. This is a great place for intelligence gathering because you have all these different views. Let's see what Andre's thinking about the yen here. This was the 23rd, the last time this was. So Andre's looking for right around my target, 640. So we'll see. It's, this 850.
Dale,
yeah.
I'm sorry to interrupt you. Yeah.
That's an old one?
That's the most recent one, the 12 hours time frame chart. The market has already nailed the 38% retracement and bounced. But I will try. I will be here today covering some of those charts. So I will also cover that yen.
Okay. All right. Okay. Great, Andre. Thank you for interjecting. I'm always I learn from you and get ideas from you all the time, and you don't always come into face. I mean, maybe you're here once a week. Sometimes weeks go by, and if you weren't a contributor, I wouldn't know what you were thinking. So I appreciate it, and I saw your motivation for being a great analyst and trader, your family, the pictures of you and your
Oh
family
yes,
the
for
other day.
sure, for sure,
So,
for sure.
you know, that's
Those,
what you
those,
trade for.
those around us are very important
Yeah.
for us,
Yeah, because
obviously.
it's going to be expensive to send your daughter to college. You better start getting hot, man.
Yeah, and it is. It still is, but it will reward me for sure, and it will reward her for sure in
Yeah.
the future. So
Yeah.
I pay a lot for my daughter education,
Yeah.
but with a specific objective. So
Yeah.
I believe
Yeah.
it will
It's called
reward me.
love.
Not only, but
Oh, yeah. All right. Well, that's what it is.
but if we consider love as an whole, I
It's the
believe
whole, it's the only reason we're
yeah,
here, man.
yeah, for
In
sure,
my
for sure.
extremely accurate and humble opinion.
Yeah, yeah.
So, I wonder if Mr. Love is here, Blake Morrow.
Good morning.
Good morning, buddy.
TGIF.
Oh man, 4 o'clock, huh? Oh,
Huh?
you don't, you still have that extra hour, don't you?
Oh, I'm with you. No. We
Oh,
don't get the time change here until November.
oh, that's right. Okay.
Yeah, I still have another month or so.
Well, you're a young guy. You can handle it.
I guess. Yeah,
Yeah.
yeah. How you doing?
Good, good. And I was just joking around yesterday. I was, put out a tweet about Stell being a great macro trader, and I don't know, I was in a goofy mood, and I put out a tweet saying that you were the handsomest guy at ForexAnalytix and Gallows Capital, and women follow you. But I deleted
I
it.
didn't see that.
Yeah, I said, well,
And
maybe Blake's not in the mood. I think I'll just delete it. But anyway, that was my tweet. All right.
well, okay. Well, I think that's a bit of a lie, but thank
Well,
you.
you could lie on Twitter.
I
People
guess.
do. That's
Yeah, definitely people do. That's for sure. They bendy the truth a little bit.
how was your week?
Actually, it turned around nicely. I had a rough. It's funny. Let me give you guys kind of the rundown of the last couple of weeks. So this month it started off really good, right?
Yeah.
And I'm gonna give you guys a little bit of trading psychology. I want you guys to understand this. So I started, and this is of course par for the course. So I go. You guys know I went to my office in Greenwich, Connecticut this week, and so my month started off. And this is, you guys are gonna laugh, and some of you will be able to relate to this. I start off my month great. I was up some pretty good money, and like I was on pace to match my last month's P&L. It started off great. The first week and a half was just awesome. I was rocking it out, and then all of a sudden, midweek of the second week, things started to turn. I gave back some profits. I had a string of losses, and then I get contacted by the office like, hey, we'd like you to come in. We have, another trader coming in from Chicago, which you haven't met. We all want to get together and, meet and talk about our goals and talk about your trading and, just meet up. We do this a couple times a year in person, and I said, oh, and I started thinking, oh crap, my month went from really good to now it's break even. I'm like, oh, okay, now I have to book my trip. I just found out, and I'm like, okay, I'm going to the East Coast, going to the East Coast here in the next week and a half. So hold on, my speaker's a little loud here. So I'm like, okay, well now I have to turn my month back into positive. Now listen to me. I need to go from having a great month to now I'm back to pretty much flat after a string of losses, and I need to turn it around and get back to positive. Because of course when I go meet the principals of the firm, I want to show them that I've done great. And guess what happened? Yeah, my month turned sour. I had like a good week.
The key word is need.
Yeah, yeah.
Anytime you need
I
to perform, you know what I mean?
exactly, exactly. And so, of course, I go to the office last week with my tail between my legs because it's just, of course, it's par for the course. It's like I'm like grinding lower, and I get to the office and I'm meeting with the principals, and my month is now negative, and they're like, "What happened?" And they don't really. I say they don't care. They worry more about my process, not my not my day to day or week to week. It's more of my process of how I make money. One of the things that I'll tell you now from experience, the anybody who you trade for um, really cares about how you recover after having some losses. And I've watched them now for years. I've watched traders come and go, and the hallmark for traders that can't make it is really the ones that can't recover. When you have some losses and you turn around and you go, hey, I pick my stuff up and I get right back on the horse and recover. Yeah, those are the qualities that anybody who's looking for a trader is going to be looking for. And I actually had a great week. Strung together some great ideas. For those of you that don't know, I was short the Aussie New Zealand earlier this week. I told everybody when I was actually in Connecticut in the chat rooms, told everybody I'm shorting the Aussie New Zealand around 108. My cost average ended up being 107.80. I had a huge chunk of it, and I covered it yesterday at 107.20. So that was good, or 107.18 or something like that. And I started building a position in the New Zealand yen last night on the long side. I got hit on a bid at 67.60, pretty good piece, and I'm looking to actually get even more of that. Now, I got asked this question from one of our traders this morning, Chi. He is like, why the New Zealand yen? And the reason for that is really simple. First of all, the Kiwi is actually starting to outperform the Aussie. The yen, the dollar yen, or the yen pairs in general look pretty well bid. And as we're up near these highs, and the risk is starting to run that there's going to be a China-U.S. trade deal here in the next couple of weeks, whether it's a ceasefire, whether it's a temporary deal, whether it's a full-on deal, I don't know. I think the market's already pretty much priced for some sort of ceasefire or backing off from both sides. But I will say this, that the risk of a deal getting done is probably much higher now. And the reason why I say that is because President Trump is now facing impeachment. Now, and I think I said this yesterday, impeachment's not going to go anywhere. It's not. It's more of the formal process of going through an impeachment that is really going to hurt his reelection bid. He's not going to be impeached, in my opinion. And maybe he will be, but I doubt he is. What he's probably more worried about is how it's affecting or going to affect his the outlook for him in general. So for him, I think it's going to be now more than ever, he's wanting to put together a China-U.S. trade deal. Going into this next year, he's going to want to have something in place where he can say, look what I did. And so I think that's the risk. Now, you guys know, as far as I'm concerned, as soon as there's a China-U.S. trade deal announced, I'm actually looking to fade risk, whether it's a day or two or a week later. I'm looking to fade risk, but going into it, I want to be long. And like I said, the Kiwis have started to outperform the Aussie. We had some very positive comments from Orr a couple of days ago. and a positive outcome between the China and the U.S. will put the Aussie, or excuse me, the New Zealand yen probably closer to 70 yen versus where it's at right now at 68. So I think that you know, 300 pip rally is not out of the question here. And technically, as long as we hold this trend line roughly, I want to be long. So that's the reason why I'm long the New Zealand yen, or building a position. And I'm not done. I want to actually you know, build a little bit bigger position than I have right now. But anyway, that's just kind of my thoughts on the New Zealand yen. And I thought I'd tell you a little story about what I did personally. And I'm sure a lot of you guys at home can relate. You can think through the thought process of that. I mean, here you are, you know, you're down. You're down money going into your, you know, going and I had to go face the music, and it's, you know, with my tail between my legs, you know, I turned what was looking to be a very promising month into a, you know, negative month. I've turned it around again, but that was what happened to me. And that was coming off like the best month of the year that I had. This whole year was last month, which is surprising for me for August, but, you know, and it really, you know, I was meeting with another trader, and I don't want to tell you what oil company he traded for, but he came from Chicago, and him and I are roughly the same age. We got kids around the same age, and he's a great guy, and he's a new addition to our firm, which, you know, we don't bring on people very often. This is the first person I've seen in a year and a half, maybe almost 2 years. So, and he's a rock star kind of guy, very macro oriented. And we were just talking about how, you know, trading is really, it's not so much the markets. I mean, the markets have something to play in it, but it's really it's you against yourself. And it very much was. This week was a perfect, or the last couple of weeks was a perfect example of that for me. Was, you know, I made a lot of mistakes and a lot of errors as a trader for the last 2 weeks, not this week so much, but the previous 2 weeks. I made a lot of really big mistakes on my part, and you know, taking a step back and weeding through all the trades that I did, it was more of my process and what I was doing, and, you know, chasing, getting caught in a FOMO, and, you know, that type of thing, and in a market that just isn't conducive to that type of behavior as a trader. So all very interesting stuff, I'm sure, and I may have put some of you to sleep already, but I'm glad that I didn't, if I did not. A couple things I wanted to talk about today really quick before I turn it over to Stelios and Steve. You look at the euro dollar is doing pretty much what I expected. I was hoping for a little bit of a move below 109 for a rally, and I'm not bullish and I'm not long. I didn't even have a bid out last night, because, you know, the last thing you want to happen is, you know, especially trading the size that I trade, I didn't want to have a bid at 109 or 108, you know, 90, and then, you know, the thing drop, like, you know, just go into utter free fall to the 78% retracement and drop 100 pips and shake out everybody and do one of those, because I could wake up with a, you know, $70,000-$80,000 loss doing stupid stuff like that. So I chose not to do that, just in case there was some sort of throwover. And so what I, you know, did is just kind of standing aside. But the whole reason why,
Prudence over valor, Blake.
Yeah, in this
How
case,
long did it take you to learn that?
Hold on really quick.
Okay, sure, go ahead.
Hold
Your
on.
dog wants you to cook him breakfast.
Yeah, I mean, it's 5:30 in the morning, and my
Is that him pushing his bowl around?
No, that's
Oh.
probably, I don't know what it is, but
Right.
anyway, damn dogs. It's like, dude, it's 5:30 in the morning. You know, the whole house is asleep. But there was a lot of people yesterday looking at the euro as a triple bottom. And there, you know, there's this, you know, there was the 109.20, 109.20, 109.20, and a lot of people tried to trade that on the long side yesterday. And I was like, oh, they're going to get stopped out. And, you know, I think a lot of them did. I think a lot of them got shook out when we dropped below 109.20 in Asia. You saw it actually, if you were in Asia trade, I happened to be just, you know, in front of my computer, just watching it. And then we slid right through here. And that was in Asia last night. We slid right, you know, to 109.05. And that's when I retweeted my chart of the day. And I said, hey, reread this really quick, because it looked like it was just stopping out everybody that got long, you know, earlier in the session over here. They just all got stopped out, and then, you know, we're bouncing around. But I think for the euro dollar to turn semi quasi bullish, I guess, would be, you know, a move above 109.70. And if we broke above 109.70, I think you could see some buying back up towards 110.20, whatever. I doubt that's going to happen today. I don't think today is going to be the day that we see that. I wouldn't be surprised if we just close near our lows today as we head into the weekend, and, you know, people start to question things. So anyway, but that's all I wanted to say about the euro. I know we have data coming out here momentarily. If you look at the data flash, we have PCE, durable goods. So we have some U.S. Inflation data coming out, which is going to be fairly important. I want to turn it over to my colleague Steven Stelios, so they can cover the news for you guys. Good morning, gentlemen.
Good morning.
Good morning. How you doing?
Very well.
Good morning,
thank
Blake.
you.
Good morning, Steve.
I have a tune for you to play this weekend by Green Day, Blake. Wake Me Up When September Ends.
Yeah.
That's a
Oh,
good
yes. That is a great song. Yeah, fantastic song, actually. Well, guys, I don't know if you heard my story about me heading to the office, but I'm sure some of you could relate to that. Whether it's reporting back to your wife or spouse that how well you've done, or, you know, whether it's to your firm as you have to face the music, I'm sure some of you guys can relate to that.
I hope I'm doing okay, boss.
All right, guys.
You're not. You're fine.
Hey, guys, just really quick before I let you go, remember, this is the very last month very last weekend you can take advantage of the pricing for the ForexAnalytix special offer. So if you guys have not taken advantage of the offer, this is it. This weekend, this is it. Until then, I mean, after that, you're stuck. And we don't make. There's no if and or buts. We don't
TLMC, too late market close.
We don't sit there and go, oh, sorry, you missed it by a day. Yeah, we'll give you that special pricing. No, you're just going to pay what you pay. So take advantage of it this weekend. It's important to be involved. And like, if you were in the chat room last night, I jumped in during Asian trade when I got limited into my New Zealand yen at 67.70. I'm like, hey guys, I just bought it on a dip, and it dropped to 67 or 67, like 65, and then ripped up from there. It's like, you know, there are opportunities, and if you're not going to know about them if you're not part of our community and you're not in our chat rooms, so take advantage of our pricing. All right, that's all I'm going to say about that. You guys have a great one. TGIF, have a wonderful Friday. Thanks everybody for being here. I'll see you on the week ahead video. Talk to you soon.
Have a great weekend, Blake.
Thanks.
Thank you, Blake.
Have a great weekend, Blake.
Thanks.
Hello,
Okay.
Steliosis.
Hey, Dale, I didn't actually see your tweet. Thank you. I saw it just when you mentioned it.
Oh,
thanks
yeah.
a lot, man. Coming from you means a lot to me.
Shy Girl agreed with me 100%.
Yeah.
Said you're awesome.
I like Tracy a lot.
Yeah, I did too.
Okay, so we have numbers in about 50 seconds. Probably time to just mention. I have a couple of things to say, but I'll just say one. We had some business climate data out of Europe. It's not that important, but they did come in negative. They're at like 6-year lows. So the conditions are definitely not looking good, and sentiment is worsening. That's definitely a trend. And remember, Germany is the driving force to the downside. This time it usually is the locomotive of the Eurozone, but this time it's really...
Hold on, I think I put my magnifying glasses on.
Yeah. So, and we'll
if you can't read that, please don't drive.
Yeah, we'll talk about the UK after the numbers. So let's see what this brings. Can you make it smaller, Steve?
No, that senior citizens,
Those are the important ones. Yeah, that's the important ones. It's okay.
senior
So-
citizen data flash.
Let's see. Use
Core
durable
PC,
goods. Better
1.89.
PC, yeah, worse personal income as expected. Use
Um,
durable good order double than expected. Use consumption lower than expected. That's
Personal
it,
spending
actually.
lower than expected. I think it's a mixed bag. I think
It
there's
is.
not
It is
that
a mixed
much.
bag, indeed.
There's
It
not
is.
that much happening.
Papa's got a brand new bag.
Yeah. The other thing I wanted to talk about very briefly is the pound is seeing some weakness today, and this was mainly on the back of Michael Saunders, who's one of the 9 Bank of England MPC members, who said that we may need rate cuts even with a Brexit deal. Now, I have to remind everybody, because these guys, they just get on my nerves sometimes. I have to remind you, this guy...
Sometimes? Really?
Yeah, Saunders, a little while back, was voting for rate hikes when unemployment was higher, GDP was lower, wage growth was much lower, and inflation was only marginally higher than it is today. So you tell me what's changed and why, with the Brexit deal, which would release a lot of uncertainty in a good way, would need cuts. I have no clue. I don't. Anybody who knows, please tell me. But this is the main reason why the pound is dropping today.
The only reason, as you understand, Stelio, that there is a shift in rhetoric is the change, the obvious change in the monetary path that the Fed is taking. And let's be honest, the US leads the rest of the world having to do with monetary policy, right? I mean, nobody wants to have their currencies ending up strengthening.
Well, we can't talk about strengthening for the pound, right? It's dropped like 15%.
That's true.
20%.
I'm not advocating that he's right, as you know. I mean, you know very well my personal opinion. My personal opinion is that rates are completely unrealistic. They are being artificially suppressed so that debt repayment can be doable. But as we know, very, very low rates, extreme rates, create all the phenomenon we've had during the past couple of decades, which means that, you know, they keep them very low to solve a problem in the short term, but in the long term, they're making all the problems bigger.
Yeah, they're kicking the can. Yeah,
it's
exactly.
exactly kicking the can down the road and let the next Fed govern, the next Fed chairman, the next president, the next you name it, solve the problem if it blows up in their watch. As simple as that.
Yeah, absolutely. Anyway, so that's all I had to say. I mean, otherwise, there's not much happening. Actually, Trump is what's happening. There's been some headlines about Iran. Iranian president said that the U.S. offered to remove all sanctions on Iran in exchange for talks. So Trump might be wanting to make some kind of deal somewhere.
Yeah, I'm sure he wants to change the agenda as fast as possible to other stuff instead of having discussions about impeachment and everything else.
Yes, good timing. That's it. I think we have we're going to have Andre today. So if you want to go
Andre is going to be with us. I joined quite late, so Stelios, I don't know if you can tell me if we have any questions that I can very quickly address, and then I'm going to give all the time to Andre. Because I can see questions before I came 3:21 on the webinar, so I can see questions prior to that.
There weren't actually any questions, just a few comments, but no particular questions. So you can take it from here.
Okay, perfect, mate. So since you talked about the pound, Stelio, keep in mind that this little inverted head and shoulders formation, not inverted head and shoulders formation on the 4-hour chart, we've come rather close to its completion. That would be at 122.50. Just a few more pips to the downside, and we're going to have completed this formation. So yeah, we're seeing some weakness, and we know that we triggered this head and shoulders, and it's moving according to that. Now, having to do with developments, the only not much has changed since yesterday. The two things that are worth noticing, and then I'm going to pass it to Andre, is one, crude is currently testing major major support area. You can see it here. Confluence of this broken descending trend line resistance now acting as support, or anyhow, question mark. Is it going to act as support? We're going to find out. And the 61.8% fib of that last move higher, both of them passing from 55.40 roughly. So, this is a key area for us to find out if, we can get some type of a bounce from here, or crude is headed much lower. If you want to add something to the mix, we can also draw this ascending trend line support. There you go. And as you see, we also have this ascending trend line support passing from the same area. So triple confluence of supports. If you really like crude, this is the place you're buying it, because you have a very appealing risk-reward ratio. But if we close below that area on a daily, and if it happens today, of course, that's also going to be a weekly close, then I'm afraid that there are very, very high chances that crude is moving much lower than that. So key area here for crude, and at the same time, key area for two pairs that are almost perfectly inversely correlated, Euro USD, finding support at the quadruple confluence of supports at 1.092. At the same exact time, the DXY finding resistance. I hate magic mouse. Finding resistance at the same ascending channel we've been talking about.
I thought
and
we'd go
previous
to
high.
purple maybe, but
might be,
maybe.
But for the time being, we're finding resistance again.
Yeah.
From the same channel resistance. This channel dates back to December of last year, so it's quite a proven.
Look how weak the U.S. dollar Swiss is compared to the dollar index. I mean, we're pressing the highs, those highs up there, and look how far away the Swiss is from where
that's because of the move we've had. Here it is, the USD Swiss still trading in the middle. I actually made this intraday update when we were testing support, saying that this is a key level, and we indeed bounce from there. Still looks to me like the USD Swiss can eventually end up breaking the downside.
Yeah.
But the main reason of this big divergence that you're mentioning, Dale, is the impressive way in which that unfolding rebound in the Euro Swiss happened. So, we got some hopes that Euro Swiss might be putting in some type of a recovery, and then that was it. It failed from that resistance area, and it moved, quite significantly lower. I mean, it's 150 pips, but let's be honest, 150 pips for a pair that is moving, with the speed the Euro Swiss is moving within a few days is quite a significant move. I mean, in comparison to the average true range, the ADR that most of you know,
great point.
It's quite a big move. Okay, so
you're pretty good, man.
Thank you. Thank you.
Not as good as Stell. I mean, I didn't tweet that you're the best candlestick guy I've ever met.
First of all, yeah. I mean, nobody wears a pink bikini better than Stelios. I can attest to that.
I can't unremember that image now.
Yeah, Euro Swiss, by the way, since we mentioned it, back on horizontal support. So keep an eye here. If we fail from here, I'm pretty sure that we're headed lower. This was anyhow a very, very, very weak recovery. Now, having to do with the rest, not really much has changed since yesterday, but it is worth, perhaps silver remains, under pressure, but give me a second because I opened that on the wrong chart. There it is. So silver under pressure again. Perhaps one more leg lower that we were initially looking for. We said that alternatively it might, consolidate horizontally, but don't forget that our main case scenario was one more wave lower. That would imply, if we extend this, and then I'm going to pass it to Andre, that would imply a fib extension for equality would imply from here to there and back there. That would imply a move to 16.5. Coincidentally or not, coincidentally or not, 16.5 would also imply more or less a retest of this broken descending trend line resistance that might act as support if we retest it, okay? So the rest more or less have remained the same, but I'm pretty sure that you want to hear what Andre has to say, because Andre, through harmonics, he has a a different, longer term view of the swings that the market produces. So Andre, let me make sure that you are.
Yes, I am. Hello.
There you are.
Steve.
Yeah.
Thank you very much.
You know how to take the screen from me, right?
Yes, I know.
Okay, perfect. Coach, by the way, do we have an interview today? To know if Andre has 20 minutes or even more.
It's all
I believe
Andres.
20.
All
It's all
Andres.
Andres. Okay.
Yeah,
So
20
Andre,
minutes. I believe it's enough. Okay.
yeah,
Thank you
anyhow,
very much.
you have more. You have more if needed, since there is
Okay.
no interview.
Cool.
So go ahead and start with your the setups with which you have more conviction, and take it from there. Okay.
Okay. Thank you.
Okay.
So
I want to wish everybody a nice weekend. I'm going to take opportunity of that to jump on a meeting that they're waiting for me. So have a wonderful weekend. Don't forget to take advantage of the offer. Last weekend that the offer is up. Thank you, Coach, for
You're
having
welcome,
us
Steve.
during the week, and everybody enjoy, Andre.
Okay, have a great weekend, Steve. And
You too.
Stella, if you're still here, and Andre.
No, he's not.
Okay.
thank you.
Take it away. Take it away, Picasso.
Okay. Let's try to, just taking the metals through Steve's opinion, and head and shoulders formation. I believe it's clear for everyone. I published this eventual formation before, a potential bounce from the bottom, printing the right shoulder. So obviously it's a pattern that requires a breakout of the previous lows. If that happens, we may see eventually, well, we have the default projection for the pattern. We never know if the pattern will reach those targets, but we have the default target for the pattern at 1417. So this is a 200% Fibonacci extension. And obviously that the breakout of this daily fractal may trigger that, that momentum. At this point, we are also threatening the previous structure support level in fractals, and we have this previous structure resistance now acting as a potential support level, as a pressure element. Obviously, that may also break out or recovering that trend line again as a resistance may trigger downside momentum, and eventually a breakout of that major heads and shoulders will happen from there. One thing that I noticed that, well, and I shared that among our community, was the time between the formation of the left shoulder, the head, and the period of the consolidation between the head, well, between the left, the head, and the right shoulder later, or the breakout of this previous consolidation process below. If you can see, after 47 bars and actually 9 days and 20 hours, the market has violated this structure. And not because we can take an edge from these situations, but it's always interesting to see those synchronizations, specifically when we are talking about an head and shoulders formation, when we tend to search for a symmetrical, let's say, in time and in price, a symmetrical behavior between the left and the right shoulder. So I will not ignore that possibility if the market decides to trade below that daily fractal at 1483, and just taking the words from Steve for metals. Now on cable, we are also, this is a 4 hours time frame chart. Let me show you first of all the major picture, or the bigger picture here. So this was the bullish shark pattern, as I mentioned before. I believe I was here already talking about this pattern. Forged at 224 extension, the second bottom, breaking trading bill a few points below the previous one. So we have kind of a double bottom there, a breakout of the previous resistance, validating the double bottom. And we are now facing the 38% retracement. So the market has rejected the 38% retracement. As I published before, the market has also formed the 168 extension, the bearish shark pattern, which forms or which gives sequence to the 5-0 pattern. And where should the market find support? At 50% retracement, obviously. So that being said, we are now seeing cable at this point rejecting the 50% Fibonacci retracement. And this is also, and because Steve was mentioning the projection for the heads and shoulders. Well, I have my projection is a little bit different. I actually believe the market has already achieved the default projection at 220, the 200% Fibonacci extension. I use, as I mentioned before, I use the body of the structure and I search for the 200% Fibonacci extension from this measurement. So from that swing, basically, as the rule says, suggests an extension or a projection similar from the head to the neck zone. So by default, I use the body of the structure to project the pattern, the default target. It has been working quite well recently. It doesn't mean that it will work every time we face a pattern or we see a breakout of the pattern. But in my opinion, I'm seeing cable now facing support at 50% Fibonacci oversold. Well, 200 moving average also supporting the price there and the previous structure resistance. So I will not ignore, actually the market is reacting well from there. So, but this completes the 5-0 sequence, which is a bullish pattern based on the bearish shark. So we have a bearish shark pattern, a false breakout below the previous low, extended later at 168 extension, 50% Fibonacci retracement, and support should trigger more bullish momentum. Oversold also triggering that momentum from there. Obviously, we have structure from above for those who trade based on a breakout of the structure. Eventually, the market will retest that structure, bounce, retesting this trend line is a possibility. On euro versus dollar, I shared also the potential for on a higher time frame, 12 hours time frame event. I believe I shared the possibility for a breakout below the body of this structure again. I was looking into this price action as a potential edge and shoulders again, retesting this descending channel, and the market has violated the structure, the previous daily support, but it has failed, at least until now, it has failed the default projection for one kind of orthodox or not so common edge and shoulder formation. So note that the market has already violated the double bottom format previously. So at this point, nothing assures me the market will bounce from this, or will just retest the previous structure and then keep falling, or even lower. Let's wait and see. At this point, to turn into a bullish, I believe I need to see the market trading above at least this descending trend line resistance. So I believe if the market starts to trade above, and if the market remains above that trend line, it will trigger more bullish momentum. Obviously, considering the previous bottom and the potential false breakout below these lows, below the previous lows, obviously for those who are trying to go long, And let me go into a 2 hours time frame chart, because almost for sure we are facing something here in terms of patterns. Let me just measure this is a 161.8 extension. So let me just
Good stuff, buddy.
Let me just extend those fibs here.
On the fly.
161.8 extension. Yeah, 161.8 extension. Eventually, the market has found some support. It's a false breakout. Eventually, nice oversold conditions. Actually, some bullish divergence between previous low and the most recent one. So we have also some. Yeah, the market is reacting well from there. So we have kind of a pattern there at 161.8 extension. Well, let's see how the market reacts from there. One chart that I want to cover is, actually we will get there, but it's dollar versus yen. Dale, because you mentioned it before, and I interrupted you, and I'm sorry for that, because we have also this bearish cipher pattern printed at 78% retracement, exactly at the same moment that I interrupted you. The market has nailed the 78% Fibonacci retracement. So we have a perfect cipher pattern. So I need to draw all my charts again. But this is what we have at this point on dollar versus yen. We have the bullish shark pattern printed below a 224 extension, double bottom, broken neck, triggered more bullish momentum. The market has approached the 168 extension, failed the 168 extension just by a few points, and it has started to fall from there. The market has nailed again the 38% Fib. Let me just adjust this Fibonacci to the most recent highs here. The market has failed just by a few points, the 38% retracement. And it has started and it has bounced from those levels. This is also the 127 extension. And let me show this on a 2 hours time frame chart. This is the 127 extension from this first swing low. We bounce, 127 extension, 78% Fibonacci, bearish cipher pattern printed. Default target for that pattern is just right here. So we don't expect that pattern to produce a movement of this magnitude. So we expect we have default targets for those patterns, but that can trigger eventually more bearish momentum for the pair. We never know about that, but that for those who are trying to short a market based on a higher time frame event, this can be the moment to trigger your shorts. The best risk reward possible that you can find inside of the market, beside the bearish bat pattern, which completes a 88% Fibonacci and which will provide you a more interesting or more friendly risk reward approach for those who try to short those advanced patterns. The cipher, it's printed at 78% retracement, but we still need to respect those highs. So let me try to go again to the 4 hour time frame chart and show you what may happen also if the market decides to break above. So, and because we can be wrong and the market will fail this fall, and what can happen if the market decides to trade higher. So actually we are now threatening these major trendline resistance from this channel. So the market is starting to produce some patterns here, moving into a sideways moving process, and the cipher, it's just one of those patterns. Eventually, an extended moment or extended price behavior inside a specific range, let's say between the daily fractal and the most recent daily support, let's say, it will form other events and other patterns inside those consolidation process. That's the place where we tend to search for, and we tend to identify those advanced patterns, those harmonic patterns. And I will not ignore that possibility to stay inside a specific range, and during that period we will see the market printing those events. But if the market decides to trade higher and eventually threatening these weekly resistance, we need to consider one extension to the 224% Fibonacci, and it's this level here. So let's say if the market rejects the idea to print a deeper pullback from these levels, we need to consider the possibility to see dollar versus yen trading higher and eventually searching for the 224% Fibonacci extension. Actually, we have the weekly fractal nailing the golden fib above. So let's take this in consideration. I believe the market can trade lower, obviously, and based on the patterns that we have, but nothing assures us that that's what will happen. Bearish cipher at this point at 78% Fibonacci.
So can I ask you a question about harmonics? Because Steve and I were talking about looking at the yen yesterday, that nothing seems impulsive, everything seems corrective.
Yeah.
And does that affect, say, for example, the hit rate when a market is trading like that?
It can, because most of them, and that will depend on the time frame that you identify the pattern. But the patterns, there are two types of patterns in my point of view. Ones that will start with an impulse, and the ones that will finish with an impulse. And let me try to explain that on an empty zone of my chart.
Thanks, bro.
Let me just try to. Actually, I can hide my.
I'm neutral. That chart right there.
Yeah, me too. But basically, we have the so-called M-shape formation. So the M-shape formation and the bat pattern, the Gartley pattern, the cipher pattern, they tend to be. They are formed inside a specific range between the X point and the A point. X, A, B, C, and a D. So basically, this is an A, B, C, D pattern at the end. So, but the pattern starts or tends to start with an impulsive momentum. Basically, we expect some type of consolidation period, and at some point the market will break that structure and it will create an impulsive momentum. I'm not saying we will see, let's say, 10 or 15 candles, impulsive candles, one after another. But the market needs to start, this momentum needs to start with an impulsive momentum, showing you a very specific signal. And providing you a very specific signal of a breakout of the previous structure. So
you know what the trend is.
We know what the trend is, but
when it's impulsive, we know.
When it's impulsive, we know.
Right. Okay.
We know how to identify an impulsive candle after breaking a breakout of the structure. Usually, will offer us a white candle, a bullish white candle to break a bearish momentum. No, we have a bearish trend, and as soon as the market breaks that momentum, it will provide us some information telling that. So basically, the bat pattern, which tends to be formed, actually it will be formed at 88% Fibonacci, so it will fill those expectations at least. It tends to retest the previous structural lows, and it will reject, but it will reject the previous lows. But it needs to start with an impulsive momentum, and it will finish with a symmetrical, let's say, an ABCD pattern or something kind of that. Then we have a different kind of structure, and we can use this example that I use it here. So we have kind of a three-wave structure, a false breakout below the previous lows, and I need to extend the previous swing low. Oops, let me repeat this fib. We search for an extension and an impulsive momentum. that will finish at 168 extension. So basically this is the shark pattern. So basically what we search for is kind of a consolidation period, a false breakout, and an impulsive momentum will complete the pattern. Then we trade the correction of that momentum. And the correction of the shark pattern, as I mentioned before, will offer you the bullish 5-0 sequence. So basically we search for a bearish shark pattern at 168 extension, and then we search for that pullback to the 50% retracement. Usually the market will retrace to retest the previous structure resistance, 50% fib, and we buy the market, expecting the market to bounce from those levels. And eventually the market will form. If the market reacts well from all that sequence, eventually we will see the same sequence at the 224% Fibonacci extension. The market will fade again to the 50%, and then we will see what will happen from here, because basically we don't expect the market to trade higher. We expect a retest and eventually the change of the shift for the trend. I'm sorry, all those lines, but just to get clear, just to get a simple, clear idea, there are two different harmonic patterns: the ones that will start with an impulse and the ones that will finish with an impulse, and we trade the correction of that impulsive momentum based on two very specific Fibonacci levels. If the market fails those levels, the market will trade higher and it will not print you a pattern with a decent probability to achieve the default target. So we don't have targets for patterns printed above based on specific ratios.
What a great primer in harmonics, buddy.
Yeah, that's and obviously we can go into deeper and search for very specific criteria, because for each one of those points and criterias, we need to be able to identify those specific criteria. It's not just a visual pattern, okay? Let's push that gold. Obviously I have those draws here, but let me just test this. Let me delete or hide this. We don't need to measure this pattern. It's here. It's a visual event. We can see the left shoulder, the head, and the right shoulder now formed, and we are now approaching the next zone for. So we don't need a Fibonacci tool to measure the pattern. We can use a Fibonacci to measure the projection. We can use other tools to identify. Actually, we can use also the Fibonacci to predict or to identify the eventual right shoulder formation. And because the manuals will say that we have a limit of this at 78% Fibonacci to form the right shoulder, if the market decides to trade above the 78% Fibonacci retracement, usually the market will not form and will not give sequence to the pattern. So we have our limits also for that pattern, but basically it's a visual pattern. One harmonic pattern can be what I consider to be one, let's say, a shark pattern. Eventually some people will consider as a butterfly pattern, and that's completely different interpretations for both. One, as I said before, one of them tends to start with an impulsive momentum, and the other one tends to start with inside of a correction, and will finish with an impulsive momentum. Just to say that those are not visual events. Those patterns will need confirmation and validation through the Fibonacci tool and the Fibonacci criteria. Basically, let's use another example. This is dollar versus CAD, which we need to wait for what the market will do here. So we have this kind of, we are inside a sideways moving process. This is the 12-hour time frame chart. We can see this as let's say a cup and handle. We're still building the handle at this point. We can see a breakout of, I can see a breakout of this smaller structure, a lower degree structure, and a retest of this, the weekly fractal above. a breakout above and eventually this megaphone formation. Who knows what the market will offer me from here? And the reason why I prefer to identify those swings, and because they offer me a specific price for a completion point, and if the market gets completed, I know what to do. I know where the invalidation point is, and I know where my default targets are too. So I just need those two factors, but I need to validate this pattern. And some of you will say, okay, this is the default bullish bat pattern. Andre is trying to project one default bat pattern, and he needs to search for the 88% Fibonacci retracement here. So this is my trigger, this is my validation of the pattern, the 88% Fibonacci retracement. But this is not the level that I will search for. And the level that I will search for is the 127 extension, because this is not a bearish or a bullish, or I'm not projecting, let's say, I'm not projecting a bullish bat, I'm projecting the bullish Gartley pattern. And in this example, we see the 127 extension positioned right above the 88% Fibonacci retracement, as I mentioned before. So there's confluence between those two patterns, but sometimes it will not be so perfect. And the reason, what criteria will change between one potential bat pattern or the Gartley pattern, it's 127 extension. So first of all, what is the 127 extension? Is one extension of this first swing. So this first swing, a retracement, and then the 127 extension from this first swing, that will form the Gartley pattern. Why? Because the market has found support at the golden fib here. So this is the 618 retracement from these highs. The market has found support at the golden fib, and then if you see, the market has found also resistance at the golden fib, and this is pure math. 127 extension, 618 retracement plus 618 retracement, you'll see the 127 pullback. It makes sense in terms of math. Okay, the golden fib versus another golden fib. If the market violates this previous structure and you need to wait for that to happen, I'm just projecting one non-event at this point. But that is the pattern that I will search for. Again, and reinforcing this, sometimes this confluence or this convergence between the 127 and the 88% Fibonacci is not so perfect. And we tend to search for perfect confluence between the 127 extension and the 78% Fibonacci retracement. If the market offers you that perfect confluence between those fibs, it tends to act very well from those levels. At this point, we just need to wait and to validate those patterns. At this point, well, I have no setup at this point unless I want to get involved in a breakout of the structure above or a breakout of the previous lows, or a small or a short-term event if I want to fade this momentum here. Then another one that I want to show you, and I want to check also what's happening at this point with S&P. I know that you have also you are interested on those on a short side, Dale. I'm sorry.
Yeah.
Are you on a short side for S&P? Yeah.
You're looking for 3011 first, huh?
Not first. I don't know what will happen. I know if that happens, I know what to do. I don't know if the market will trade there. We are facing a bearish sharp. We are approaching a bearish sharp territory. The 168 extension. This pattern it's not printed yet. Okay, the market has nailed it. Has approached that Fibonacci extension. Not printed yet. Nothing assures me the market will nail and fail from this golden Fibonacci extension. which is nothing more than an extension from the first swing low, extended above first level for the shark after the false breakout. I can't get tired to share these among people. False breakout, extend the last swing low, extend it to the 168 extension. As soon as the market goes that level, we will find some pressure for sure. We never know what the proportion of the next swing, obviously, but the market tends to offer some pressure at those levels. The market has offered some pressure as soon as it approaches the Fibonacci, but the pattern, it's not completed yet. And as always, the shark patterns can also extend to the 224% Fibonacci, actually not this one, and that will put the price trading inside a box of confluence, let's say, or convergence between another bearish shark pattern at 224 extension and the crab pattern at 161 extension. So this is one first swing, the pullback, retest of the previous low, let's say golden fib pullback here, or 78% fib. But I need this swing to be an impulsive momentum above this structure. So I need the price here. At some point, I need a clear impulsive momentum to complete that pattern above. If the market fails that, even though we are not facing the same.
Well, wouldn't you say, Andre, wouldn't you say the last impulsive move was the decline that we had from on the 24th?
This one. The 169 extension that I'm searching for. This level.
It looks like it started at 12 o'clock on the 24th and went straight down in 5 candles from the 308 level, 3008 level. Go to your left. Go to your left.
Okay, go to your left.
Okay,
yes.
that decline.
This one. This decline.
Yeah, that one. That decline. Yeah. That looks impulsive, didn't it?
That looks impulsive. That looks impulsive for sure.
Yeah.
This looks impulsive.
That's what I'm saying, that one.
No,
I mean,
I
kind of judge what's impulsive by the acceleration of how quickly it gets from point A to B.
Yes. It is an impulsive momentum for sure. No.
Okay. That's the only impulsive wave I see on your charts.
We have a few others previously.
Most are to the downside.
And lower, most are to the downside, but that doesn't invalidate the possibility to form patterns against that the most recent momentum. Actually,
I'm just talking my book, man.
That's correct interpretation. It's right. So, but we can see this bullish sharp pattern printed at 168 extension.
Yeah.
And sometimes we will not, the market will fill those criteria, and I'm talking about Fibonacci criteria between the point X, A, B, C, and D. And sometimes they are not so specific in terms of impulsive momentums and corrective structures, and we need to pay attention to those swings.
Okay.
Yeah.
Great presentation.
So it's our time now, Dale. We don't have an interview today.
No, I mean, if you want to keep going, go ahead.
No, just to finish, I can't remember which one it was. Dixie, let me check here. Actually, I have a few of them, but we don't have time for those today. Let me check these on 12 hours time frame. Yeah, we are now, it's the same story, patterns and more patterns and projections and more projections. We have an edge and shoulders here on Dixie.
Yeah.
I can see this as an inverted edge and shoulders, and we are now not approaching it. We need new highs on dollar index to achieve those default targets. 168 extension. This is what this is. This is 9986, and then the one that I shared before for our subscribers, the one at the major one, a 168 extension, actually at 111. So this is the major
important
the
zone
major-
coming up.
Correct. Yeah, the important zone. As I mentioned before, I was seeing this as an ascending wedge. As soon as the market starts to bounce from this level, we can start to identify those structured trend lines, support and resistance. And I was starting to identify this as a potential wedge, ascending wedge. And for that to happen, I need to see a retest at least the third time of those highs. And eventually the formation of one of those patterns above, feeling some pressure there. Dollar versus Mexican peso, I have a note here for a 2 hours time frame sharp pattern, exactly. Dollar versus Mexican peso. I call your attention for, or at least for those who are here, I call your attention for the shape of this momentum here, because this can end up retesting the highs. Obviously, it's too soon to predict the eventual cup and handle, but this shape here is so familiar for those type of patterns. We have the 168 extension printed right at the, actually the market has nailed a 38% retracement already from those highs. So we have the Mexican peso rejecting the 38% fib. This is also a few points below the 168 extension in the first level for the chart. So this is the 168 extension reversal or potential reversal Fibonacci extension. If the market fails there, we have also a second option at 224% Fibonacci. I'm not saying those will offer you the best risk-reward approach. Attention to a retest of those highs. Golden fib position at above, so I will not ignore also. I never ignore a golden Fibonacci above. Let me check this on a daily, because as I published it before, and let me push this from our platform, because I believe I get a clear picture here for our viewers. Dollar versus Mexican peso. Okay, this was the chart that I published for our subscribers, and the market at that point, the market was reinforcing this daily support. So we are already trading above this Fibonacci zone. So let's say the default 38% Fibonacci retracement, we are printing one eventual right shoulder for one pattern that will, if the pattern breaks below this daily support at 1935, I believe the market will search for, well, two different zones. First of all, the first, one ascending structure trend line covering those lows, and the market may suffer some pressure there. And we have the 78% Fibonacci in 1907, the bullish cipher pattern. So this is the level where I will search for longs if dollar Mexican peso starts to approach that level. If the market decides to break this structure and eventually the weekly fractal, well, it tends to search for the next fractal. We have a monthly fractal below, and we have projected the projections, let's say the default projections for the edging shoulders at 1859. So basically, this is what we can expect from here, but without ignoring, as I was mentioning before, without ignoring this shape, without ignoring those sharp patterns that tends to offer you later a bullish opportunity at 50% Fibonacci. So if the market decides to print that sharp pattern at 224% Fibonacci extension, we may see the price pulling back to the 50% Fib and then offering you another opportunity to go long. So this is not a reversal pattern. Okay, we expect some consolidation for false breakout, extension, pullback, and the new trend continuation. It's very similar, and people tend to confuse an ABCD pattern. So what is an ABCD pattern? The ABCD pattern tends to offer you a short opportunity. We tend to search for the 38% Fib, but then the market needs to keep trading higher because it's an ABCD pattern. It's not an ABC correction. It's not a three-wave structure. And we expect the market to keep trading in the direction of the major trends. No, it's an ABCD pattern. It tends to reverse after the pullback. And it tends to reverse the previous major trends. So if you see an ABCD pattern, and you need to understand how to validate the ABCD pattern, and I use the existence of divergence or not to identify those ABCD patterns, or the difference between an ABC correction or an ABCD pattern, and one of them we have an impulsive momentum, obviously, but we need time to explain all those patterns. And I believe we will share some educational content in the future in our platform, for our subscribers and for our viewers. So stay tuned to that content also. And Dale, just to finish, I want to alert all those who still here that time is running out, and to subscribe our services. And I believe it's a very interesting opportunity. And there's always people that thinks that we don't need to spend money to learn how to trade, and it is a very, in my opinion, it's a mistake. We need to spend money. If you don't spend money directly to someone to teach you, or to someone to guide you, or to someone to mentor you,
you'll pay the market.
You'll pay the market. You'll pay your time to learn. You'll pay in other ways, for sure. So don't create that stigma about, oh, I don't want to pay to learn, or I don't want to pay to. Man, you are paying to be surrounded with some of the best traders on the planet. So why not to pay a few bucks to be here? So you will you will feel the difference after a while, and if not in your wallet, at least in your wisdom. And that is crucial. And I believe education is the pillar of the society. I believe tremendously in the education of our kids and teenagers. I'm an education apologist, and well, I believe it makes part of the process to trade the market. You need to learn, and you need to spend money to learn. And that's my quote for today.
How about this, Andre? You can't learn. Yeah. You can't learn experience, but you can learn from the experience.
From experience, absolutely.
You like that one?
Of course, I like it. It's not the first time that you mention it, and I truly agree. And specifically because I'm blessed, because I work with you on a daily basis, and you have a lot of experience inside the market. No one's talk about the Dale Pinkert, but in that perspective, but you have the full picture of the market for 25 or more years. I'm not incorrect. No, Dale.
Okay, I'll go with that number.
No, it's not 25. I believe it's more. No, I believe
25's enough, bro. All right, go ahead.
But 25, I believe it's enough for sure. But that pays your investment on ForexAnalytix for sure. Just be surrounded with Dale and Blake and Steve and Stelios and I don't want to talk about Amanda and Paulie, because everyone talks about them, and they are actually amazing scalpers inside the market. I don't see as a scalper, so I can't get so familiar with them.
It's a heck of a team, man. Best, so I've been around 25 years, right? Man. According to you, best team I've ever been part of.
I'm not sure if I committed a huge mistake here.
No, it was a compliment.
How many?
Okay?
How many?
It was it was a
35.
Stop. Anyway, don't just count your years, count your blessings.
Your blessings.
And thank you so much, Andre. I'm going to tell Belu to have a little tagline on this today's webinar, because you not only shared your views but you did some teaching about harmonics here, so I want people to see it. Have a great weekend, buddy, and
thank you very much. It's you know, it's a concept, Dale. I'm sorry to interrupt you one last time. It's a concept. I believe it's a routine process that I believe people needs to embrace, if not on harmonic trading, any other type of trading that you prefer, but you need a routine process to identify, to measure, to calculate your risks, and to repeat on a daily basis, and be sure that you are here tomorrow. And for that, you need to be very disciplined in managing your risk and managing your trades, and be sure to be here tomorrow. It's crucial. Yeah.
Okay, Andre.
Thank you,
All right. Have a great weekend, buddy. Enjoy.
You too. Thank you very much.
Smell the roses, and we'll see everyone on Monday. Adios. Remember, don't just count your pips, count your blessings. And we hope that we've added value to what you were attempting to accomplish this week. We'll kill them next week, too.